Imagine having a highly advanced yet completely free powerful indicator that fully understands the unstable nature of market dynamics and so prints high-quality buy and sell signals. So, this is a buy signal, as indicated by this indicator. If we were to take a long position here, well, you can see that the trade would have been profitable. Then what about this? This was a sell signal. We can take a short position, and the trade would have been profitable. Even without any extra confirmation indicators, this tool is pretty decent. In this video, we're going to go over what this indicator is, and we'll also combine it with another indicator to craft a strategy out of it. So, if that's something you're interested in, as always, hit the like button for the YouTube algorithm, subscribe, and turn on the notification bell to get notified when we upload a new video. Now let's get right into the video. Now to get started with this indicator, you have to go to TradingView and then open any trading instrument that you like in any time frame. For this video, I'm going to be using the 30-minute time frame of the Canadian dollar with the Swiss franc currency pair. Next, you're going to click on this Indicators tab here and type in the two-pole oscillator indicator. And you want to select this one that was created by this guy, the Big Beluga. And then you can see that the indicator will be added to the chart. Now this two-pole oscillator is an advanced momentum and trend strength indicator that improves upon traditional oscillators by utilizing a two-pole filter to smooth out price fluctuations. This filtering process helps minimize noise, providing clearer signals and more reliable insights for traders. By refining market signals and reducing unnecessary fluctuations, the two-pole oscillator aims to provide traders with more actionable and precise data, helping them make informed trading decisions. So Cryptonomy is an exciting platform that offers a range of features to help traders maximize their profits and make money in the crypto market. Cryptonomy is a UK-based venture fund, crypto lending and trading organization dedicated to supporting emerging crypto projects through its Launchpool product. Its lending program offers staking opportunities with annual returns of up to 180%. Users can also utilize public or private trading programs to profit from market volatility without limits. Currently, Cryptonomy has over 1 million users, £6.1 billion in reserve capital, 5 years of successful public operations since 2019. To get started with this platform, you have to create an account by clicking on the link in the description below and on the pinned comment. Then you will enter your username, email, and your password in these two places. Then finally, you will check these boxes before you click sign up. When you are done with signing up, you will be brought to this page like this. Now this is my own account dashboard under this interest account. You can see that I have over $5,021 deposited. This is where you will earn over 180% APY. So here, you have about 4 different services that Cryptonomy has brought to the crypto market to help you manage your crypto assets, and also to help you in accumulating more crypto while waiting for the market to recover. First, we have the flexible staking. On this section, you have as many different crypto assets that you can invest in to be making around 97% yield on your investment. So, let's say I want to invest in Bitcoin. You can see that I have 0 BTC currently. The APR for Bitcoin is 24.72%. The profit sharing is 50-50. Then you are going to click on deposit. Here you can enter the amount of BTC you are comfortable staking. This is the minimum amount you can stake. The most important thing that I love about flexible staking is that you can withdraw your funds anytime you feel like doing so. You can scroll down to check the coins or the asset that has the highest APR, like this Baby Doge coin. Next, we have the fixed staking section. Here on the fixed staking section, you can stake as many coins as you want, because the Cryptonomy staking platform has about 700 different coins that you can invest in. You can see that fixed staking offers interest rates up to 153% for Bitcoin, Ethereum, and BNB. If you continue scrolling down, you will see that fixed staking offers even more than 172% APY. So, when you see the coin that you would want to invest in, then you are going to click on deposit, and here you can see the compound interest rate that you will be getting if you allow your staked coins to stay up to 1 month, 3 month, 6 month, and up to 12 months. Then you can select the amount you want to stake in. You can see that I have some BTC in my wallet. You can convert the USDT in your wallet by using this exchange section. Then you will click continue, and after that you will need to confirm all these and also check this box, and then click create. The platform also has a Launchpool section with various projects, sales price, ROI, and total raise. I will discuss more about this Launchpool on my upcoming videos. The margin trading section displays the average monthly profit for Bitcoin and Ethereum, with the minimum expected profit being 157%. To open a position with either option, users can click on the Open Position button, select the amount they want to do, and confirm the position by clicking on the Open Position button. The platform also has a loan section for those who want to get a loan. Cryptonomy offers a great opportunity to get passive income without constantly investing in new tokens. You can sign up to this platform with the link in the description below and on the pinned comment. If you're interested in Cryptonomy, it's recommended to follow them on all their social media platforms like their X, formerly Twitter, platform and Telegram channel. So go ahead and check out the platform using the links in the description below and on the pinned comment. Now let's get back to the video. To get started with this indicator, follow these steps. Just double-click on the indicator to open its settings panel. Then navigate to the Style tab and activate the last plot option. As you can see, it turns on the signal line, which is a thin blue line. The oscillator band, which fluctuates between purple and blue, is located next to the signal line. If you look closely at the indicator, you can see that the oscillator and the signal line occasionally cross above and below each other. A buy signal is printed each time the oscillator crosses above the signal line. The chart displays that same buy signal as a blue upward arrow. A sell signal appears when the oscillator goes below the signal line. This is indicated by a downward arrow on the chart. So not only does it print the buy and sell signals in the oscillator window, but it also prints them on the chart window. Next to every signal, there's a dotted line known as an invalidation level. A bullish invalidation level appears near the buy signals, and a bearish invalidation level appears near sell signals. These invalidation levels are important because they can be used as stop-loss placement levels. Whenever an invalidation level is touched by the price, an X label appears to show that the price went against the signal and effectively invalidated it. If you had taken any positions, that would also mean that any stop losses set just beyond the invalidation level might have been hit. So here's how this indicator works. The oscillator calculates price deviations from a mean value and then applies two-pole filtering to smooth out the signal. Two-pole filtering is a way to reduce noise while preserving important trends, effectively applying two layers of smoothing to produce a cleaner signal. Once the signals are generated, they're colored to show whether they're bullish or bearish. Bullish signals appear in blue, indicating bullish momentum, and purple signals appear when momentum is bearish. Now, if we revisit the settings of this indicator, and when we navigate to the Style tab, we can disable the last plot option. On the Inputs tab, we have the filter length and these level colors that regulate how much smoothing is given to the oscillator. A higher filter length generates smoother signals by minimizing short-term noise, but it may cause more delays in identifying trend changes. In contrast, a shorter filter length makes the oscillator more responsive to price swings, but it may also give more false signals due to its higher sensitivity to short-term variations. Traders can adjust this setting to alter the balance of smoothness and responsiveness based on their trading style and market conditions. Down here we can toggle the levels on or off, which will hide or show these invalidation levels. For the strategy I'm showcasing, I need the invalidation levels for stop-loss placement, so I'll leave them enabled. If you have other changes you want to make, feel free to do so, but I'm going to use the default settings and click OK. Next, let's explore how we can use this indicator to trade by identifying overbought and oversold conditions. Looking at the indicator scale, we have a midpoint at 0, additional levels at positive 0.5 and negative 0.5, and extreme levels at +1 and -1. A market is considered overbought if the oscillator goes above +0.5 or more, strongly above +1, which offers a higher probability of a pullback. Likewise, the market is oversold when the oscillator goes below -0.5, and it's extremely oversold if it goes below -1. Now let's go over some of the examples of high-quality trading opportunities using this great indicator. Here on the chart, you can see that as the price came down from here, you got a buy signal, but the price later ended up hitting the stop loss, which is this invalidation level, and an X label appears to show that the price went against the signal. You can see that there were another two bearish signals that their stop loss got hit, but later the indicator displayed another buy signal, and at this time, looking at the indicator, you can see that the buy signal appeared almost at the center line of the indicator, and the oscillator band has crossed above the signal line and also expanding in size. Then, because of all these confirmations, you could have grabbed the long position tool and enter a long position right at the close of this candle and set your stop loss at this invalidation line and extend your profit target to this level, giving you a valid risk-to-reward ratio. Here's another example, but this time a bearish side of the market. You can see that the price came down from here, but the price started slowing down around here, and there were some bullish and bearish signals that got invalidated. When the price moved down like this with all these big body bearish candles, you got a sell signal. If you look at the indicator, you can see that the oscillator band has crossed below the signal line. Then you could have entered a short trade at the close of this candle and set your stop loss at this invalidation line and extended your profit target down to this level, giving you another valid risk-to-reward ratio. For this strategy, the volumetric variable index dynamic average, also known as the VIDIA indicator, is one of the indicators that you can use together with this two-pole oscillator. To add the indicator to the chart, simply navigate to the Indicators tab and search for the Volumetric Variable Index Dynamic Average, and click on this one that's made by Big Beluga. The indicator will be added on the charts. Once you have added the indicator, you are going to double-click on it. Here you can change the VIDIA length to 20, then go to the Style tab, disable this lines option, and then click OK. This trend indicator is identified by a green ribbon for bullish trends and a red ribbon for bearish trends. It also measures trend strength using the delta volume, where a trend is considered strong enough if the delta volume is at least 20%. For example, to take a long trade, you basically want to have a buy signal printed within a strong bullish trend. Here you can see we have this small circle which represents our buy signal. This buy signal is only valid if it's printed under the -0.5 level, this gray line. If it's printed anywhere above that line, the entry would become invalid. Condition number 2, at the time the signal is printed, we need the VIDIA indicator to be colored green to indicate that the trend is bullish. We also need to check the delta volume, which should be at least 20% to confirm a strong trend. Right now we can see it's well above 20%, which means this trend is strong enough to push the price higher and higher. Also keep in mind that the long signal from the two-pole oscillator is going to be displayed on the chart. As you can see, the signal appears here on the chart. Then we can take a long position at the close of this candle, and the stop loss is going to go right under the invalidation level, which is actually this dotted line right here. The take profit can be extended up to this level. If you let the trade run, we can see that it ended up being a profitable trade. Now for a short position, it's going to be the opposite. Condition number 1 is to have a sell signal printed by the two-pole oscillator. Here the sell signal was valid because it was printed above the 0.5 levels, the gray horizontal line. Looking at the VIDIA indicator, it was red, confirming a bearish trend. The delta volume was -134.55%, which is well below the -20% threshold, indicating a strong bearish trend. We can then take a short position, place our stop loss above the invalidation level, and extend our profit target down to this level. If you let the trade run, you can see that it ended up being a profitable trade. This is the two-pole oscillator, a potent trading instrument that aids in the identification of trade signals with less noise, momentum, and trend strength. It produces a high-probability trading method for successfully capturing market movements when paired with the VIDIA indicator. Now, if you know another trader that might benefit from this video, please share it out with them, and let us know in the comment section below the concepts you would like to see covered in the next video. Please don't forget to smash the like button and subscribe to our channel to get notified when we upload a new video.